All right, everyone, here we are with ticker symbol OCGN, Ocugen Inc. So before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel. Invest for tomorrow. To all the subscribers, welcome back. And as we dive into this chart, I do want every single investor and viewer to stay tuned on in towards the very end, because we're going to cover about the S&P 500 index, why it's been so rocky, and how that has a direct correlation to the 10-year treasury. So stay tuned for more information on that, and we're going to talk about the tweet of the day. So this stock soared past resistance, and we're going to look at that in just a moment. But I want to zoom out, and if you've been watching my videos since way back here as it was running up below $1, and it kind of stabilized, and it ran up to almost $5 and came back down, and how it was going in that sideways movement before the big run and pullback, I've always told you guys to ask yourselves, what made this stock run to begin with, and what could make it run again? So Ocugen has always ran on good news of Covaxin. So Ocugen depends on Covaxin's results, Covaxin's process and FDA approval, process in emergency use, process on when it's coming to the US market, and process on how it's being distributed in India right now and other places around the world. So Covaxin has always had great news, and we can see those spikes. The first spike was Ocugen is going to partner with the company that makes Covaxin. The second spike was the trial phases were pretty good, and also what the cocktail is made out of, and also the room temperature stuff, how long it could take without spoiling. And then it was going downwards, and then it spiked up again once the SEC forms and everything officially was being signed that they're partnering up. And then we could see the big run, pulled back down, and it's been fighting and went through phase 2 trials, and now we finally saw phase 3 trials, and the stock is showing some strength. So it ran up today on news. So what's the big news? Well, the biggest thing here is that the phase 3 study of Covaxin showed the vaccine to have an 81% effectiveness in preventing COVID-19 after the second dose. That right there is a big deal. That's what we wanted to know, how different or how much of a competitive edge it has against Johnson & Johnson, which recently, released theirs. What competitive edge it has against Pfizer, Moderna, and all the others. So right now, Pfizer and Moderna's vaccine demonstrated an efficiency or effectiveness of more than 90% against COVID-19. Now, the only issue is the fact that these need to be stored at very specific temperatures. Now it says here Ocugen stock remains a relatively higher risk investment compared to these other COVID-19 vaccine developers. And then it says this word here, one with potentially more upside due to its smaller market cap. Oh, it's saying another company. I thought this was a different word. Albeit or bet or bite. I'm not sure how to pronounce that, but basically it's saying to look into that one. I'm not too sure about anything with that one because it has a smaller market cap, I guess, and there's still room. And they're saying that Ocugen is already kind of overvalued and it's looking kind of risky, but we're going to have to see how things play out, in the near future. But this stock runs on news. One of the biggest things that makes this stock run is on news about Covaxin. We were waiting for phase 3 trial. Now we know how effective it is. It's a little bit less than Pfizer, a little bit less than Moderna, but what makes it different is the fact that it has the way that it's processed and made is the upper hand on the traditional way of making a cocktail for a vaccine, and also the room temperature that it won't spoil even though you want to keep it at a certain temperature, which is pretty effective when it comes to transportation and getting this around the world, even to more rural areas. So Ocugen still has a shot here, and Covaxin is looking to be a pretty effective and decent, you know, vaccine that can have a competitive edge or could compete with some of these other brands. So let's look at our support in 50-day moving average. The 50-day moving average is 1070. Anything below that is bearish. Anything above that is bullish. Our support here is 1040. If that gets broken through, you want to watch carefully between 1040 and 955 how the bulls react, if they can bring it back up, or are the bears tearing this down fairly fast. Now, the highest point before the dip was up here at this point, and that's 1340. If 1340 gets broken through, this could be on its way up to newer highs, new resistance levels, and then the next resistance level would be up here at the highest point of 1405. So you definitely want to watch this and see how it reacts. But before getting to any of those numbers, I want to go ahead and narrow it down just a bit, like a nice little midway point, and that would be right here at this drop that was pretty big, and then it continued going lower, and that's at 1195. So if the bulls can break through that, they're pulling away from the 50-day moving average in an upward direction. If they can turn it into a support, they have some room to go, but at least we know where the momentum is going, and that this is going into bullish territory, hitting newer highs and new resistance levels. So this is completely optional, but 1195 could be used as a resistance to watch before getting to 1340, since it's such a broad stretch. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button to let me know you watched this video. Stay tuned till the end because we have a lot to cover, even about Bitcoin. I touched base on that for just a second in the conversation, but we're going to mainly talk about the S&P 500 index, the tweet of the day, and 10-year treasury. Stay tuned. So for everyone that has made it to this point in the video, I'm going to talk about the S&P 500 index and why the market is down and why it continues to pull down and struggle to stay up, okay? I want us to be aware of this, and it has a lot to do with the 10-year treasury. So let's jump into the tweet of the day, and we're going to jump back into the S&P 500 index and also 10-year treasury. I usually talk about individual stocks to add to your watch list, but right now I believe there's so much more value in being aware of this than an individual stock. Now, if you want to know live updates on 10 plus ticker symbols that I've already shared with everyone in the last 2 weeks, and there's many more to come, you can join us over at the Patreon. The link will be down below in the description, and you will know live updates on what I'm watching and what attracted me to it. So the tweet of the day is institutional investors buy a stock. It makes a bold statement about the stock and the institution's outlook on the stock. This is why I like to know what institutional investors are buying or looking at, because it just makes a bold statement of the company, and it makes a bold statement on what they see moving forward. Who is your favorite institutional investor to watch? That's my question to everyone, and I'm thankful for the one person that commented, and they stated it was ARK. Who is your favorite? Comment down below in the comment section who is your favorite, and if you don't have a favorite, you need to find one. And if your favorite is ARK, I really want to encourage every single investor and viewer to find another one. Not just ARK. ARK is great, ARK is growing, but ARK is really small compared to some of the largest institutional investors out there that have a track record for the last 20, 30, 40, 50, even century of years. Like it reaches up to a century. They've been around for so long in the last decades and even up to the last century. So definitely do some research on that. But if you do have one other than ARK Invest, I would love to see you talk about it or comment down below who they are. So let's talk about the treasury yield. So the treasury yield, as I've been looking at it, and I did the beginning of this video, it was sitting at around 1.46, almost 1.45 as I was looking at it today, and 1.46 in the last several minutes. I mean, this was literally 20 minutes ago before I started doing the video. I was looking at it and it's already jumped up to 1.48. When we zoom out to the 1 month, it's gone up from 1.13 all the way up to 1.48. And when you do the 3 month, it was below 1.0, and we're almost double, right? Almost, not there yet. And the 6 month, you go back down to 0.6, and then year to date, and then the 1 year, the lowest that we've seen at 0.5 in the history of the 10-year treasury. And when you go all the way to all, the highest was up here at 15%, and all it's been doing is going down. This has been the turnaround, and it's making a lot of investors uncomfortable. As long as this doesn't pass 3%, I believe, in my opinion, based off the history of this, it could go back to a healthy consolidation. And if it stays there or pulls back downwards, it could be even a healthier sign for a bullish market. But there's going to be a lot of rockiness and a lot of uncertainty as this continues to go up if it gets closer to 3% or 2%. Now, this is creating the wildness and the uncertainty in the market overall. And that is why we're pulling downwards. We need to see what's going on. I have the RSI pulled up here on the 30-minute, and this is an oversold area. This could bounce back up, and we could see something like this happen, bring itself back up, kind of level off, and then Friday bring itself back up a little bit, and then all of a sudden we pull back down in the near future going into next week or the next several weeks, especially if this continues to go upwards. This is something to watch carefully. It's the 10-year treasury, right? That's what you want to go ahead and search, and it's at 1.4. It's supposed to show a percentage. As long as this stays below 1.5, 1.6, I shouldn't see the S&P 500 falling drastically. But if this continues to go upwards in such a quick spike like we're seeing it, it's going to create some uncertainty and rockiness in the market. So I do want every single investor and viewer to be aware of this. We need to watch this, and hopefully, again, we are in a correction and not a crash, because the treasury yields have hit the all-time lows. It's bouncing back, and what if all it does now is go back up to newer highs for the next 5 to 10, 20 years? You know what that can signify for the market? A long-term crash that a lot of investors, experts, billionaires, millionaires are talking about, and Bitcoin is hitting all-time highs. That right there has put a big question mark, in my opinion, on what's going on. I just want to be aware, and it's very important to not be caught by surprise, but I want this to be more of a correction than a crash, and that we can continue to grow exponentially and see a bullish market continue with corrections that are healthy. No crash and no long-term crash, because what would happen is what a lot of experts say, and this is just a quick drawing, don't use the numbers on the side. Imagine that this was the peak up here and we fall all the way down, and then the market's just going to sit like this, sideways. We hit a big crash and it's just an L-shape recovery, and then it's going to take some time before, years before that starts going back up slowly. And that would be one of the longest crashes that we've ever been in the history of crashes. I hope I'm wrong. I hope that I'm just thinking this, and that all of those experts and billionaires are incorrect, and that we can go ahead and hopefully have this priced in somehow into the market, and that worst case scenario, this goes up to 2-3%. The market gets adjusted to it, we get used to it, and we continue, because we were growing even when it was at 2, even 3%. We were a growing economy, and the S&P 500 index was growing. So hopefully we can handle this and not get too crazy. But the one thing I'm watching right now more than ever is institutional investors. While all retail investors are scrambling around, they are focused and they're executing orders, and large ones, on specific stocks. As always, guys, thank you guys so much for watching, and let's make some money.